Welcome back to Ignite&Scale. Joining me today is Neil Shah for the London Stock Exchange Group. Neil spends his time working with some of the most ambitious tech and tech-enabled businesses from early stage right through to global leaders. So this isn't theoretical, this is what he's seen on the ground, what the best founders do differently, how they think about capital, and how they scale in uncertain markets. Neil, it's great to have you on.
Great to be on, Mike. So good to see you. How are you doing?
All good, thank you. All the better for seeing you. I mean, if we dive in, Neil, perhaps, if you just give us a short intro to your background and how you ended up at the London Stock Exchange Group.
Absolutely. It was kind of by accident, Mike. Like you, I started my career in investment banking. I did that for about 15 years. So I was at Dresdner in their tech team, 2004, 2009, mostly doing sell-side M&A. I followed my boss across to an American bank called Thomas Weisel Partners, where there were two of us doing tech, and we're surrounded by guys doing mining deals. We were acquired a year later by a St. Louis, Missouri headquartered bank called Stifel that few people had heard of. And Stifel was just on a massive acquisition run. I stayed there for best part about 10 years, and we were probably about 4 people at the low point, and about 450 people when I left.
Wow.
So that was in 2020. I got a call from the stock exchange from Chris Mayo, who heads up the Americas here, and he told me that they were looking for someone to come and head up tech. And I thought, well, I've tried M&A. I've done some IPOs in the US, in Europe, in the UK. I really quite fancy trying to get more tech companies to IPO in Britain. Where better to be than the stock exchange. There's been a hell of a ride. It's been a fun ride. And just yesterday, we announced our first deal on our new private securities market. So we've been helping companies go public for the last 300 years, and now we can help private companies get some liquidity too.
That's amazing, and what a background as well. I've always followed your career very closely. I mean, you've got a great and unique vantage point given what you've done. You've seen a huge amount of different founders at different stages. When you step back, what separates the best founders from the rest?
That's a really tough question, Mike. No founder's the same. But if I were to think about the folks I know, what really drives them is so many have a clear mission in mind. They want to fix a set problem. So you take look at someone on public markets like Romy Savova, fix the pensions industry. You look at Greg Jackson wants to cut energy costs for the nation. Fantastic mission. And building one business wasn't hard enough. He decided to build two with Kraken too. That's something we're seeing a little bit more. I think we're seeing founders being so much more ambitious than they've ever been, recognizing that they can go on to world domination. Nick Storonsky would be a crime not to talk about Nick and what he's achieved at Revolut. But who would have thought that you could be doing this sort of thing 15, 20 years ago? And I think it's a factor of the environment as well, that you've got a number of founders who are doing this for the second or third time. They've got those lessons from before. They see where the value went. And I think they're being bolder. They are recognizing what their true strengths and weaknesses are. And where it makes sense, they might step aside and bring in a professional CEO. We've seen that at Alica Bank and Tide, and those two are flying. Alica, exceptional growth, just a Series D round the other day. Tide, I think, has got about 10% market share in the UK, and is placing contrarian bets while everyone's looking west. Oliver Prill, CEO there, is looking right and expanding into India and going after SMEs. We meet even bootstrap founders, Mike, that guys like Jason Heavens at EPOS now, he's scaled to about $150 million of revenue in 11 or so countries, serving probably about 90,000 SMEs around the globe, and not raised any external equity. Amazing.
Yeah, I mean, it's phenomenal, what you see, and I guess you see a lot of businesses that get to a decent level, but very few make that kind of truly scaled. And I guess that's a unique balance, isn't it, of kind of behavior, vision, maybe a bit of luck as well. But
Absolutely.
what enables that transition to get that truly scaled operation in your view?
I think you've got to really believe in what you're doing
Yeah,
and have conviction in it yourself, but then be able to embed that conviction in your investors to get the
yeah,
capital to fund you, and also the team around you to help them stay with you on that journey to build something immense. You take someone like Alex Kendall, you've probably come across, given your background in auto at Wave. Who would have thought that a small company in Britain could take on Waymo, right, and
yeah,
be striking partnerships with Uber and launching in 10 countries and embedding their tech in Nissan. He raised 1.5 billion earlier this month, which is just phenomenal. And yeah, he's yet to ship a product, which he admitted at
yeah,
some awards dinner last night. But I've had this demo and I've been on in the cars, and it's fantastic. What he's been able to do. Capital is a massive factor.
yeah,
Historically, I think companies just raised insufficient amounts,
yeah,
particularly on AIM, right? Where you
yeah,
and I grew
yeah,
up, and
yeah,
there we're kind of fortunate to have investors who were, um, you know, taking VC risk, but without the downside protection. So of
yeah,
course they're
yeah,
going to cap out at some point. I think what we've got now is proper VC
yeah,
to fund some of these frontier businesses that get them to a scale. You've got founders who are a little bit more ambitious and will say, we're not going to sell out for that 20, 30 million pound check. We're going to ride this out.
yeah,
Seeing Victor Ripavelli at Synthesia turned down a $4 billion acquisition offer from Adobe, classic example. The guys at Wiz in Israel, Asaf turning down Google the first time they showed up, say no, we're going to hold out for a bit more, and that's fantastic to see. I think that
yeah.
falls back to that conviction point that people want to go the full mile.
Yeah, no, absolutely. I mean, one thing I find fascinating is some founders use capital sometimes as a weapon indirectly, others get trapped by it. What have
Yeah,
you learned about how the best entrepreneurs think about capital?
you're right. You nailed it there as a weapon, right? I think good founders will be doing their raises and following the playbook and going up the series is from A to B to G. I think strategic founders will think what's the best source of capital for my next bet, and sometimes that means going onto the public markets early, right? You take someone like Louis Hall at Cerillion, who flowed pretty early. Keith Nielsen, who's been on the market for 18 years, they recognize that perhaps private markets weren't going to deliver what they needed. The guys behind Vision Direct, who brought Vulcan 2 to market last week for a bunch of acquisitions, again found that perhaps public markets serve them better than what private do, but that doesn't always work that way. Sometimes private
Yeah.
will serve you better. Vishal Murray at Quantex has realized that there's ample growth equity funds out there and sovereign wealth funds and
Yeah.
pension funds like GIC and Ontario Teachers, and if they can help him get to a scale where he's effectively de-risk the business. They're at about 100 enterprise clients today. Hopefully, when that transitions to public markets, public market investors will be willing to pay a more fulsome multiple for that type of business.
Yeah, no, absolutely. I mean, if we bring it back to present day, I mean, the
Yeah,
backdrop is rather interesting. It's quite noisy. We've got geopolitics, rates, energy, AI,
right.
lots of things going on, changing by the day or sometimes by the hour. How are you finding the best founders are navigating this uncertainty at present?
It's been remarkable. I think it'd be really easy just to sit on the sidelines and
Yeah,
point to another third standard deviation event, but uncertainty has become our reality, and you've
yeah,
just got to deal with it. And I think that the best founders embrace this, right?
Mm.
I remember when Sebastian at Klarna, as an example, was the first to do a down round
Mm.
post 2021, right? He
Yeah,
recognized that if he did that, the business would be in a good stead. He'd have
yeah,
to put his ego aside and go from, I don't know, 40 billion to 7 billion or whatever the business is worth at the time. But that was a bold step. And I think the best founders detach themselves from valuation, which ultimately is a number people write down on a piece of paper at a moment in time,
yeah,
and you don't know if it's going to hold up tomorrow. I think what you can really stand behind are the fundamentals, right? So if you've got real revenue, real customers, that's what's going to move the needle.
yeah.
And that's what true value is, not valuation, which is in the eye of the beholder.
Yeah, no, no, absolutely. I mean, we've read a lot about kind of UK founders. You've seen a lot about UK markets, comparing it to US founders. Actually, I think we both saw some data from Finch Capital about the fintech sector, where actually
Right.
Europe is ahead of the US at the moment. But the conventional wisdom was US is far ahead and US founders think differently. What's your view on that? If you were to categorize UK versus US founders, what would you say? Obviously generalizing, but what are the key differences? And is some of that misinterpreted? And you're in a great spot to kind of see how those different capital markets work and how people think about it.
Uh, Mike, I think this topic comes up for as long as I can remember,
Yeah,
and it was no different 20 years ago, right? That we always looked across to the States, which we
yeah,
forget is the size of Europe.
yeah,
Um, but if we look at where we are and the density, it's not just London, but the UK, and you can get to most of Europe within the same time it takes to travel around the Bay,
yeah,
if we're realistic. And um, on that basis, we're on par in terms of a sort of talent density perspective, the number of startups here,
yeah,
and I think people are being more ambitious. But we are playing in hard mode, right? That
yeah,
when we export, we have to comply with local regulations in France, Germany, the Nordics that might differ from the UK. Pools of capital are smaller, but sometimes that can be an advantage to you.
mm,
The late Jay Patel, who is CEO of IMI Mobile, told me that sometimes you can get imposter syndrome. Building your company in the UK, you're looking across to the States and you see your peers and they've raised three, four, five times as much as
yeah,
you. You think, how am I going to make it? But what he realized is once you've won customers in the UK, actually scaling to the US when you invest properly,
mm,
what wasn't as hard as it might seem. And where American companies struggle, and I saw this as a banker, is expanding beyond America into
yeah,
Europe.
yeah, yeah,
We used to get calls. We want to set up an HQ in France, and we're going to go and buy this company in Italy, and we're going to be able to integrate it really easily. Of course, Europeans have already learned these lessons in the early days, and recognize that that's not going to work quite as easily as some of these founders think. So I think playing in hard mode definitely gives you an advantage. Now,
yeah,
how do we accelerate this, Mike? I think what we really want to do at the London Stock Exchange is unlock pensions capital and insurance
yeah,
capital
yeah,
and retail. There's no shortage of money in the UK, except we're exporting most of it or investing in fixed income. And really, it ought to be in equities, backing some of these entrepreneurs.
mm,
So having more UK growth equity funds. And as we saw with Wave, the
mm,
more
mm,
Schroeder Capitals and Bailey Giffords coming into rounds like that to help these companies scale. I think the best companies are going to get money from wherever, by the way,
yeah,
but
yeah,
who loses out are pensioners ultimately, because they don't get to reap the rewards of these companies, which go to pensioners around the world. So
yeah.
that's our mission, to try and fix that ASAP.
And UK versus Europe. I mean, I'm fortunate to work with some great founders in the Nordic market, and I've done some work
Hmm.
in Central Europe, and I think the talent pool there is phenomenal, and there's some great private equity firms out there as well. Would you say UK, are generally still way ahead of Europe, or are they? picking? Are they catching up in pockets? And what would you say the hotspots were in Europe?
Yeah, I think the UK is always looking over its shoulder. There's tremendous things happening in Paris. We've seen the Nordics, which have always had pretty hot capital markets. They continue
Yeah,
to churn out some fantastic companies, and that's been true for as long as I can remember. Germany as well. I think you tend to find that in the continent, the market is a little less competitive.
yeah,
When I was at Stifel, I found it easy to get M&A mandates from European clients than Brits, so just
yeah,
let less bankers compete with. And I think the same is true in business. What we are seeing though is as founders become bolder. I think they're not being shy about expanding into Europe. Take Zilch. Our friend Ryan Mendes there, and
yeah,
they've just acquired a Lithuanian bank.
yeah,
So I think people are seeing opportunities and recognizing that, if you're starting in the UK or France or Germany, that will only get you so far. But I think what the Swedes have really nailed is that their businesses from day one are
yeah,
global, and we're
yeah,
starting to see much more of that in the UK, and think about,
yeah,
well, how quickly can we expand out? And I think for some, Europe is considered a secondary expansion. Often they want to get to the States because it's the biggest market, and I kind of
yeah,
get that. But going back
yeah,
to Jay's example, there might be some merits in continue to expand out in the continent,
yeah.
and being global that way.
Yeah, no, absolutely, and I will have to get Ryan on the on the podcast because the journey that Zilch have had has just been absolutely phenomenal, and something the UK should be rightfully very proud of as well. So I'll get him on.
You need to extend that episode, Mike, because he's got a lot of stories.
Yeah, yeah, no, we will, for sure. And in terms of founder evolution, I mean, I don't think it gets talked enough about enough in terms of founders have to evolve massively as these businesses scale from operators to leaders, control to trust, instincts to systems. In your mind, what are the key character traits that you see in the best ones as the businesses are scaling up?
If I had to summarize it in one word, Mike, I think it's just flexibility.
Yeah,
Now we see so many founders who start off with, you know, 8.5 million revenues, like Morgan at Alpha Group, or Keith Nielsen at Craneware, that I think joined AIM in 2007, about $50 million revenues, 200 million now. And you know these folks just adapt and they grow the business, and each day they might improve 1%.
yeah,
Milan Patel at Doddishore, another great example. I met Milan when he was working at Peter Simmons, and the finance team, very green. You look at him now; he's a slick software CEO. So I've got a lot of faith in people just to learn on the jobs. That I guess like I have as well. But
yeah.
these people are doing incredible things as founders, far more impressive than sitting here finding companies to IPO at the stock exchange.
You're too modest. In terms of obviously mistakes, common mistakes that people make, are you able to characterize those as well? Is it over hiring? Is it timing? Is it over raising? Is it losing focus? What would be the
Yeah.
most common mistakes that you see?
I guess 2021 wasn't that far away, and the
Yeah,
most common mistake we saw then was companies just raising too much capital from the
yeah,
wrong investors who didn't quite understand their business,
yeah,
and then trying to hold on to those valuations, and trying to grow into them, where perhaps the best strategy might have been to say, look, that was a mistake. We need to raise at the right level, get the business in a good shape, transition back to being a sustainable business. I think sometimes founders pay too much attention to what investors think, and the greats, are really bold visionaries who say, no, look, we understand
yeah,
our business so much
yeah,
better. And I think
yeah,
where they've got control, it's so much easier to do that, right? Um, so I always encourage founders to try and hold on to control. Don't give away um, equity too soon in their business.
yeah,
But it's really around that flexibility point, and be able to learn and adapt to varying market conditions.
Yeah, no, absolutely. And finally, Neil, I guess maybe the hardest question, but asking you to get your crystal ball out now. But if you zoom out over the next 5, 10 years, what are the biggest factors in your mind that will define the future winners in the market?
That is a hard one, Mike.
Is it capital discipline? Is it AI leverage? Is it speed? Is it being global? I guess
It's
yeah,
Yeah, I don't want to sit on the fence, but it's all of those things, right? That
yeah,
we are discovering how real AI is at the moment, and clearly there's some hype, but there's some substance too, and I think the market's rewarding businesses that are able to embed AI without overspending in the right areas to accelerate their growth, create new products, put them ahead of their customers, sorry, their competitors. I think capital discipline is ever so important, especially in times like this. That just because you've raised a big round doesn't mean that you'll be able to raise a similar round at the next juncture. So what is this capital going to be used for? What are the alternative sources? Um, you know, if you have to pivot and let's say you're looking to sell the business, but the buyers aren't there. Are you able to take this company public should you so wish? How ready are the processes around you? And I think the best folks are getting ready and able to pivot in real time.
yeah, yeah. No, very, very wise. Neil, it's been great having you on and massively appreciate your time. Perhaps one last one in terms of at what stage do you typically get involved with companies and what's the best way of getting hold of you if companies hit that criteria and want to engage with the stock exchange?
But Mike, we'd love to hear from companies as early as they're willing to talk to us, frankly. No conversation starts too early. I think my boss Marcus was talking to Gordon Sanghera at Oxford Nanopore about 12 years before the IPO. We're used to having these conversations for decades. And for me, we just want to create value along the way. A company might decide to IPO in 3 to 5 years, but there's lots of things that we could be doing in the meantime, introducing them to our network, helping them celebrate some of their milestones along the way, getting them familiar with the market, helping them find a CFO or NEDs, and just being supportive cheerleaders, for a lack of a better word. Best way to get hold of me is LinkedIn and email. It's neil.shah@lseg.com, and I'm really rooting for UK tech to help save UK GDP and the UK economy.
Neil, I really appreciate your time and your experience is second to none. Your team do a fantastic job and we're, rightfully very lucky and proud of the London Stock Exchange and congratulations on what you're doing with private companies. It's a real service to the UK economy.
Thanks for everything that you've done, Mike, and hopefully we can help you and some of your companies soon.
Let's hope so. Thank you.
Thanks.
If you want to listen to more episodes of the podcast, we're on all good audio platforms. Our website is also www.cambriaprivatecapital.com, and you can also find myself on LinkedIn and Twitter, where we publish our weekly blogs as well. Please do get in touch if you want more information.